In today's weekly Forex forecast for the week ending March 21st, 2025, we're talking about the DXY, the Euro, the Pound, the Euro versus the New Zealand dollar, and also gold. All right, guys, so let's go and kick things off with the DXY daily time frame here. And a pretty slow week last week. You can see mostly consolidation down here around 103.50 off of this low from back here in November of last year. So this is obviously going to be support for the DXY moving forward. And we have resistance coming in up here around the 104.60 level. Now, what I've talked about recently is the fact that the DXY is trading back below this trend line from October of 2023. So this, in my opinion, is a significant development with the DXY failing to hold above this back here. So starting off March with a massive sell-off here, you can see that this up here around 105 is going to be key resistance for this market. And this week too, this weekly candle is the most aggressive selling from the DXY that we have seen since all the way back here. So this is what I talked about recently, where you can see this candle right back here, okay, looks very similar to what we're seeing now. Now, obviously, there's no guarantee that we get some similar price action here over the coming weeks, right? But you can see that, I mean, even before this, we had these lower highs and lower lows. We had a significant sell-off, and same thing back here. Lower highs, lower lows, significant sell-off, breaking down below these key levels. However, one thing to keep in mind, though, is you can see that even back here, right, even after this big red candle, we saw the DXY dip below this, okay, on this candle right here, and then rally to cover or fill in some of this imbalance, right, through here. So that is something we could see here over the coming weeks where we just get a ranging market between this 103 area down here, maybe down toward 102.50 and up here around 105. All right, so keep that in mind that after a week like this, you tend to get some consolidation, here in this area while the market digests what just happened. All right, so keep that in mind as we move forward. One thing too that I do want to point out to you guys, and we talked about this in VIP, which we talk about all of these markets in VIP, by the way. And if you guys do want to join us in Discord for real-time discussions and also seeing my trades in real time, check out the link in the description of this video for 85% off. Or if you're on the website, click on that VIP or join VIP link. So looking at the DXY here off of these lows, we talked about this last year when the market was reclaiming this area, but there is, and I'm going to remove this here for just a second so we can take a look here at this channel. So off of this low down here, you can see where we have this trend line down here. All right, now this was actually the bottom of this channel right here, where you can see that the upper portion of this, all right, and again, we talked about this last year, but this right here, all right, off of these highs back here and these lows, you can see where this was the breakdown that we got in 2024. And through here is when I was getting very bullish on the US dollar because this signaled a sell side failed breakdown, okay? So this right here was bullish. Now, this level comes in just below this recent low. So this kind of leads me to believe that we could actually see the DXY head lower next week and take out this low. And then this area around 103 could come into play as a significant bottom while we see the market move back here toward 105. All right, so that is one thing I'm considering here with the DXY, because you can see that following the reclaim back here from last year in 2024, we never actually saw a full retest of this level. So here it is as resistance here. We saw the reclaim on this candle, and notice how we never got a full retest here. So this down here is something I'm considering for next week, where we have the lows building up, you have liquidity building below the lows, and so we could see the market sweep those lows, test this level around that 103 mark, and then recover back above this for the move back there toward 104.60 to 105. So in my opinion, the most telling thing for next week, okay, the most telling price action for next week for the DXY is going to be if we see the market take out these lows back here. All right, so sweep these lows and then recover back above this level. If we get something like this, then this right here is your trigger. All right, that's the technical trigger right there to go long, in my opinion, back here toward these highs and potentially up there toward 105. All right, so we'll see if we get that. And the reason I'm talking about this too is, again, guys, markets don't move in a straight line like this. You are eventually going to get some type of short squeeze. However, the price action right now isn't really convincing because typically in a short squeeze, you do see something very aggressive especially with this kind of aggressive selling. You get the market bottoming down here and then aggressively spiking up and then back down, right? And we haven't really seen that yet with this market just going sideways. So this doesn't really tell me that this is going to be the local bottom. We could see a little bit lower here from the DXY before we see this market give us a local bottom and squeeze those shorts. Now, keep in mind though, guys, and this is the last thing I'm going to say here before we move on, is that trend line I showed you that comes in around 105. This is not a case where you want to be getting long-term bullish on the US dollar as long as it's below this area up here. All right, that trend line we just looked at, and also lows like this. All right, so as long as we're below areas like this back here, this, in my opinion, again, is not the time to be getting long-term bullish on the US dollar, because any kind of short squeeze here could be temporary relief before we get that turn lower. All right, but again, I think that this area just below these recent lows would be really interesting if we do get a move down there into that 103 area next week before we see a bounce. Next up is the EURUSD, which isn't really giving us a whole lot to do here over the past week. It's been very sideways following that aggressive rally since the start of March. And what I mentioned last week was the potential for a failed break above this. So you can see through here on the daily time frame, we have resistance back here. We have the close above, the close back below. And now this is kind of indecisive in terms of, do we see the market close above this or below it? It's been hanging out here all day long, just showing the indecision here from this market. Now, to be clear, guys, I did not trade this. Okay, I did not trade this market. In fact, I am in a euro short, but it's against the New Zealand dollar. That's over 200 pips in profit. And that is the only trade that I put on last week. And again, that was shared with members in real time. So outside of that, all I did last week was on Monday, I booked profit on a Bitcoin short for 3R. And then I put on a EURNZD short that we'll talk about later in this video. But that's all I did. I did not trade the euro simply because the market was just too sideways through here. And furthermore, I really think that this trend line here is better viewed on the weekly. Just because if you look here on the daily, you can see where back here, this was not respected on the daily time frame, right through here. So this is not something that I would trade on the daily. It is more, in my opinion, of a weekly level. So for the euro, what I'm watching next week is really what happens with the DXY. If we get the DXY into 103 and a reclaim around 103.50, then that could signal a pullback here for the euro. But just like I said with the DXY, this is not, in my opinion, a time to be getting long-term bearish on the euro. Because even if we see the market pull back from current levels, so let's say that this is the top or we get a top up here somewhere, this could just be a temporary pullback before we get the market heading higher, right? And so I don't think that right now is to be getting long-term bearish on this market just because of the aggressiveness of this rally that we've seen so far in March. The market is trading back here within levels that it hasn't seen in months, right? So this does look pretty bullish for the euro, and so far the lack of a pullback is also pretty bullish, right? We saw the market fail here. However, it is still holding up relatively well through this area. Now, at the same time, I can't justify trying to long this market considering what the market just did, right, without some type of pullback. So ideally, I think if you're looking for longs here, you've got to wait for sweeps of lows like this back here. In my opinion, I don't know if we're going to get it, but something like that would be, ideal for a long sweep down here, reclaim back up in this area. But like I mentioned with the DXY too, given what we just saw from the euro, I would expect the market to remain range bound here for a bit while it digests what just happened. But really not a whole lot to do here. In my opinion, I do think there are better opportunities out there in the market. So similar situation for the pound, where the market has spent most of last week going sideways. In fact, all of last week went sideways really. It is, however, holding above the top of this channel that we've talked about. So you can see that we have from these lows down here, we have the bottom of this channel, and we have this high from right back here that we've talked about. And you can see where so far the market is holding above this, treating this as new support. So as long as it's above here, really there is nothing to do. If we had seen the market come up here and take out this level and then close right back below it, then for me, at least the way I trade, that would have been an ideal setup, right, for a move back down here toward 126.80. But right now the market is showing us that it just wants to continue turning higher. So in that case, we have resistance coming in up here around 130.50. So just like with the DXY, I think if we do see the DXY into 103 next week, before we see some relief for the dollar, then we could see the pound come up here and test these highs back here, which, given the fact that if you'll notice back here at 130.50, notice how these two highs right here, okay, number one, number two, this high back here did not take out this one. So liquidity built up above this high. We saw an equal high over here. We didn't see the market sweep this liquidity. And so this right here, these equal highs are telling me that there is going to be liquidity above this area. So what I think we could get from the pound next week, okay, and I'm by no means, bearish overall in this market, because like I said with the euro, this is not a market where you want to be getting long-term bearish, just given the rally that we've seen so far in March. Now, with that said, though, what we could see here from this market is a move up here next week to sweep these highs around 130.50. So tag this area, sweep this area, and then potentially a pullback from there. Because again, at some point, the market is going to pull back, given the amount of liquidity that is building up below some of these lows. All right, so just my opinion, but again, I think that for the euro and the pound, I really do think that we are probably going to see these markets kind of range bound here for a while, following these massive moves that we saw so far in March. All right, now for the pair that I really want to talk about, and it's kind of ironic because the EURNZD is not a pair many talk about. Everybody wants to talk about the euro and the pound and the dollar yen, etc. However, I really think that this pair right now is showing something really clean here on the daily time frame. So we talked about this all last week in the VIP group in Discord, and I also shared my entry with members in real time. So my entry was up here on this candle right here on Tuesday at 191.40. All right, so right up here, and it's currently well over 200 pips in profit. Now, again, guys, I shared this in real time as I was taking the trade. I explained exactly why I did it. So I'm not going to go over that too much in this video, but just know that what I'm looking at here, okay, this level right here goes back to one of the highs from March of 2020. This was during the COVID period. And what you'll notice here on the 4-hour time frame is that up here at this level, you can see where it was resistance back here. We got the close above, immediate retest as new support, right? This is indicative of a potential failed breakout. So this was the first clue that we were going to get a pullback here from this market. And you can see lower highs and lower lows since that time. Now, the real opportunity, or the bigger opportunity, I should say, will materialize on a sustained break back within this channel. So if we get the EURNZD closing back within here, right, next week or even today, then this up here becomes a failed breakout, which upward breaks of ascending levels like this usually fail. And if we get that, in my opinion, we're looking at a move back here toward this low through here, and then potentially this high around 185.35. So one interesting thing about this area down here is that this is obviously going to be support based on this high. However, it's also just above the 2025 open, and we also have an open gap from back here, all right, early March. We saw the market gap up. It never closed this gap through here. So there's an open gap, it's key support, and also the 2025 open. So all of these factors could serve as a magnet for this market if we do get that failed breakout. Now, one thing to keep in mind here, right, and this is where things get a little bit tricky, is it depends on whether you're looking at a linear or a log chart. And really, in my experience, guys, it's not one is better than the other. It really just depends on what makes more sense. However, this view right here is in log. If we switch over to a linear chart, you can see where we get a little bit of a different view here, right? We have these highs back here, and we have this low, these highs through here, and the market is now approaching support. So there is a chance that we do get a bounce early next week back here into some of these lows before we get a potential failure. All right, so just something to keep in mind here with this market. However, with that said, though, you can also see how these are pretty similar too in terms of the level that has to fail. So you look here on this linear chart, and you can see where this level comes in right around, let's say 189, right around that mark, maybe just below. And if you look here at the log view, you can see where this level is currently around 189.30 or so. Okay, so really it's only a 30 pip difference between the two. And if you get something very convincing next week down here in this area, which is what we would need to make this a failed breakout, then really it's not going to matter too much, that 30 pip difference. All right, so again, guys, I am short here. Full disclosure on that, up here from 191.40. And I will add to the position if we do get a convincing close below here next week to make this a failed breakout. And I'm looking at this low back here and also that 2025 open or just above, right around 185.35. So last but not least, we have gold here, XAUUSD, which ever since back here in late 2023, this market has been moving within this ascending channel. So you can see where last week we did get a significant breakout where we were watching the market go sideways here for a while, right? We got the sweep of those lows and we got the break higher. Now, the market did tag 3K last week, and that is a significant mark for gold. Obviously, being a big round number, that is going to be resistance here for this market. Now, with that said, though, I still think that we do have higher for XAUUSD simply because we haven't seen the top of this channel yet. Now, there's no guarantee of that, but if you look at this price action here over the past few weeks, what you'll notice is that we had this resistance level that built up through here. We had a close above, the close back below. This made this a fake out, and we did get that move lower below these lows to flush that liquidity, okay? Now, this right here, okay, this back here may seem insignificant for what we're seeing right now. However, it does, in my opinion, impact what we could see next week, okay? And what I mean by that is if we had seen gold just going sideways back here, okay, and we hadn't seen this flush below the lows, if we had not seen this back here and the market had just gone sideways, right? Let's just assume the market went sideways like this and then broke out. I would be a lot less convinced by that breakout. And the reason for that is because the liquidity that built up below those lows would not have been swept. However, because we saw this move right here, okay, once you get a breakout like this that we had last week, following a sweep like we had back here, this is much more convincing now for a continuation over the coming days and weeks, because this liquidity back here has already been taken by the market. So there's no reason to see gold fail here and head back down in this area because we already saw that liquidity taken below 2880. All right. So I hope that makes sense, guys. But really for next week, if we do get a retest down here around this 2940 area, this is obviously going to be key support. And like I said, I do like the idea of a bounce from here if we do get a retest up there toward the top of that channel. All right. So we'll see what happens here. We'll see if we get it. Obviously, a close back below here would be bearish. But one thing too to keep in mind, if we look at the weekly time frame, right, and this is another factor playing in favor of 2940 as key support, is if you look here at the range from last week's candle, so from the low down here up here to the high, what you'll notice is that the 50% comes in perfectly with 2940. Okay, now there's no guarantee that we do see a retest down here before higher, but my point here is that if we do see a pullback next week, then I do like the idea of looking for longs from this area for a push up there into the top of that channel. And that's as long as 2940 holds, guys. Obviously, if we see weakness there and the market start to break back below it, then that's a different story. But as of right now, again, I do like the idea of looking for buys on pullbacks as long as 2940 holds on the high time frames. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 85% off lifetime access. See the link in the description of this video, or if you're on the website, click on that join VIP link. Have a great weekend, and I will talk to you again next week.